Click the bell icon to get latest videos from Ekeeda.
Hello friends, while solving the questions of NPO, we may come across item of legacy. What is legacies? When a person dies, in his will, he may show his wish that particular amount from his properties should be donated to NPO after his death. Such amount is received by NPO after such person's death as a wish of that person through his will. Such amount received is called as legacies. Usually, legacies are not a usual income for NPO, therefore, it is added to capital fund and capitalized. Let us go through the question. Lalit Kala Kendra Mumbai gives you the following information. For the year ended on 31st March 2013, you are required to prepare income and expenditure account for the year ending 31st March 2013 and balance sheet as on 31st March 2013. Let us go through receipts and payment account. To balance brought down. Opening cash balance is given 1300. Bank balance is given 9500. These items will not be recorded anywhere in accounts. Locker rent received from members. This will be recorded as income. Entrance fees received from members. Adjustment says 50% of entrance fees are to be capitalized. So entrance fees total is 1900. Half will be capitalized. So 950 will be added to capital fund and same amount will be deducted from here, from this figure of entrance fees, which we first record as income. Sale of old newspaper, income. A receipt from drama, it will be recorded as income. Legacies, that is amount received from the properties of deceased person who have donated certain amount through their will in their lifetime. Adjustment number 2 says legacies are to be capitalized. So we'll add this amount to capital fund. Miscellaneous receipts, it will be recorded as income. Let us go through the payments. Purchase of stationery, expenditure. Furniture purchased will be purchase of asset. Investments purchased, purchase of asset. Expenses of drama will be recorded as expenditure. Postage and telegram, it will be recorded as expenditure. Magazines and newspapers, it will be recorded as expenditure. Salaries, it will be recorded as expenditure. Closing balance of cash in hand will be recorded as asset. Closing balance of bank recorded as asset. Additional information. Capital fund on 1st April 2012 was rupees 10,800. This is opening balance of capital fund recorded on liability side now. Second, legacies are to be capitalized. We already discussed this information. Outstanding salary rupees 300. This will be added to expenditure. Second effect, liabilities. 50% of entrance fees are to be capitalized. We already discussed this item. Let us start with receipts and payment account. Receipt side, we have first opening balance of cash 1300, opening balance of bank 9500. These items will not be recorded anywhere in accounts. Locker rent 500. This will be recorded as income by locker rent 500. Entrance fees 1900. By entrance fees 1900. Sale of old newspaper 150 rupees. This will be recorded as income by sale of old newspaper 150 rupees. Receipt from drama 7850. This will be recorded as income. Receipt from drama 7850. Legacies 11,000. This will be added to capital fund. Liability side, to the amount of capital fund we are adding legacies 11,000. Miscellaneous receipts 800. This will be recorded as income by miscellaneous receipts 800. Let us go through payments. First we have purchase of stationery 500. This is recorded as expenditure. Purchase of stationery 500. Furniture purchased 5,000. This will be recorded on asset side. Asset side, furniture 5,000. Next we have purchase of investments 10,000. This will be recorded on asset side. Asset side, investments 10,000. Expenses of drama 3,350. This will be recorded on expenditure side. Expense of drama 3,350. Postage and telegram 250. This will be recorded as expenditure. To postage and telegram 250. To magazine and newspapers 400. This will be recorded as expenditure. To magazine and newspaper 400. Salaries paid 2,200. This will be recorded as expenditure. Salaries 2,200. Closing cash 300. Closing bank 11,000. This will be recorded on asset side. Cash in hand 300. Cash at bank 11,000. We have considered all items of receipts and payment account. Let us go through the adjustments. Capital fund opening 10,800. This will be recorded on liability side. Capital fund 10,800. Legacies are to be capitalized. The item of legacies already we have added to capital fund. Outstanding salary 300. This will be added to expenditure. Add outstanding 300. So it becomes 2,500. Second effect of 300 will be recorded on liability side. Outstanding salary 300. 50% of entrance fees are to be capitalized. Entrance fees we have recorded here 1,900. Less 50% capitalized. So 950 rupees will be deducted. So outer column will have 950. This 950 deducted will be added to capital fund. Entrance fees 950 capitalized, added to capital fund. With this, we have recorded all items as well as given effect to adjustments. Let us close now first income and expenditure account and then balance sheet. We have closed income and expenditure account. We got balancing figure on debit side 3250. This is excess of income over expenditure. This is called as surplus, which will be added to capital fund. We have added surplus to capital fund. Now total capital fund has become 26,000. That is closing balance of capital fund. We have closed balance sheet. Total of assets as well as liabilities comes to 26,300. This balance sheet is tallied. In this question, we learn how to give effect to adjustment of legacies. Thanks for watching this video. Stay tuned with Ekeeda. Subscribe to our channel Ekeeda. Thank you.